And gentlemen, welcome to the Fintech Frenzy. Today, we've got PayPal news, we've got SoFi on the list, a little bit of Robinhood as well, but it is definitely a shorter day than most. Hopefully, you guys are doing well. Let me hear where you guys are coming from. Let me see some names in the chat. That being said, let's jump straight into it because, not because we need to jump through it, but I want to get you guys your information as fast as I can possibly give it. Well, obviously, that's not true. I mean, I like to have a little fun with the chat here and there, answer some questions. And first, I actually saw a comment earlier on before the stream that said, Tanner, saw your video that you posted today, but you didn't talk about EPS. And I apologize, guys. Whenever I actually look at companies, I very rarely look at EPS unless I'm comparing the company to its past quarters. But anyway, I like to just look at the numbers raw, so I look at the actual net income as it is. That being said, unless I'm looking at valuation, something like this. That being said, the net income that I'm projecting of roughly $50 million will come in just shy of 5 cents of fully diluted EPS. Okay. So right now they're projecting about 4 cents. We might see 5. I mean, hey, we might see 6. Or 3. The truth is, I do not know, right? If it comes in anything where it was in previous quarters, it's going to be beating expectations. And they're currently estimating for roughly between 40 to 45 million. As you guys know, they always beat expectations. And in fact, whenever it comes to net income, they've only ever beaten by over 100%. Now, unlike previous quarters, whenever they've been really lowballing their net income projections, this is not the case in Q3. And in fact, they're actually projecting a pretty reasonable number here. Now, is that due to savings from Technisys, savings from a dividend payout that they don't have to do because of the preferred share deal that they did with the convertible note offering? Okay. If you guys don't know, just a little while back, I think it was a little less than 6 months ago, or maybe just right around that time, SoFi did a convertible note offering, which actually allowed them to get rid of their all of their preferred shares, which was roughly costing them in a preferred share dividend of about 12.5%, about $40 million a year, right? That gets paid every 6 months, I believe. And in fact, I think that actually happens in September and March. But it's about $20 million per payment. So potentially that is playing a large role into it. Technisys could be playing a large role into it. And then also just, normal amount of growth that they're also suspecting. So the interesting part about this, though, is, the unrealized part is the rate cut, right? The 50 basis points is the part that SoFi's management was not necessarily pricing in. And in fact, they even said that they weren't pricing in any rate cuts. So we'll have to see how much of an actual difference that makes. But yeah. Hi, y'all from the Come Rocket family. There you go. Wow, 6 months. Yeah, I mean, it was not last quarter. It was the quarter before. So it was probably about 5 months ago. Because something along those lines. Does it feel recent? It doesn't feel too recent to me. Another 50 basis points in November is coming. I know this has been a large topic of conversation. Let me check the rate expectations right now. I heard that there was a lot of 50 talk, but I honestly have not been checking it. So currently, a 50 basis point cut in November 7th, is a 37.4% chance of happening at 25 basis points at 62.6%. Once again, ladies and gentlemen, I am going to be on the more conservative side, a 25 basis point cut, not only because I believe that that's better for SoFi, but it leaves them a little bit more room to continue to be flexible and not have to do, a pivot and head the other way. The expectation dropped a little. Cool. Okay. So yeah, answered the thing about the 5 cents EPS. Good. Let's jump into some other SoFi news just really quickly. I saw this on X, although Godwin here didn't at me in the message. That's okay. He did message Data Driven Investing and said, "Hey, is this new?" And Data Driven Investing said he hasn't seen it. I haven't seen it either. But yeah, anyway, so if you end up downloading the Upside app, you can end up getting an additional 60 cents per gallon in cash back for your first 2 fill ups. Now, I don't know if this falls under another marketplace edition because you're going to have to download a separate app, or if this is just a straight referral. But it is very interesting that they went from, you know, giving additional air travel tickets at discounts through Expedia to then getting into entertainment tickets with potentially Ticketmaster, and now they're getting into other types of products that potentially people can save money on. It is extremely early. One of the greatest ways to start a marketplace is to also have merchants on your platform, right? You're going to see that with Affirm. We already do see that with Square. And by far the biggest example of that is PayPal and Nubank, essentially. So this has been something that I've been covering for some time, but it's, in my opinion, it is the greatest fintech advantage right now is the fact that they can have a relationship with both the merchants and the consumers and a way to transact between them. Okay. If SoFi ever does start dropping SMB banking, then they can start getting into that advertising platform, that marketplace platform, all of these things. But for right now, while it's still very new, SoFi is just continuously partnering with businesses on a one-to-one basis. Okay. Still perfectly fine. The idea is just giving the best benefits to the SoFi member audience. And by bringing that marketplace or that deal onto SoFi, they're also getting paid for that as well. You're not promoting other apps for free. Did someone say PayPal? Yes, Crossroads. Yes, I did. Yes, I did. And in fact, do I have one of your tweets here? I don't actually think I do. No, I don't. I was going to talk about your one with the competition. I think it's I'll just bring up your tweet really quick because I had some things I didn't quite agree with you, and that's okay. Here, let me show real quick. So, Crossroads, or Roy on the channel from time to time, was talking about more killer apps that are going to take out PayPal. And while I completely agree with the idea that all these new apps are not going to be the ones that take out PayPal, the list going from Apple, Amazon, Google Pay, Affirm, Shopify, Adyen, MasterCard, Amex, Visa, Pays, Zelle, FedNow, Block, Stripe, XPay, whatever, the whole list. The part that is the devastating part is the fact that there is so many entrants. Okay. It is, in my opinion, like you showed off how they are growing. It's, in my opinion, that this is still highlighting a business that is not growing as fast as the marketplace. Okay. So I don't think it's as big of a deal, meaning like a cheap stock, as it was back whenever it was $50, $60, because they still are not growing as fast as the overall total addressable market, which means they have a smaller and smaller percentage of the pie every year. Now, the problem is, like, if you look at a company like, Shopify, or you look at a company like Airbnb, their market share is not going down, or at least not nearly at the speed in which PayPal's is going down. PayPal is now at a really good point where they could potentially end up turning that around and start buying themselves back a little bit more of that market share, but they lost a lot in the meantime. And some of those players are very respected, large players. Are they all at one going to take away PayPal's business? No, but they could slow down their future growth if they take a customer that feels fully satisfied with Apple Pay, and then potentially they do not need the products at PayPal, even though they were looking for a digital wallet all along. Check that growth versus market again next year at this time. I honestly don't think it'll be anywhere near. The problem is that the PayPal market, depending on the sources that you're looking at, is an extremely fast market, like 15% year over year. You're looking at some sources say 18% for the future years going forward. There are companies that can hold up that level, right? Like Apple does, even, MasterCard and these sort of ones in the United States do very, very good, or have very good growth rates that are definitely fighting against that payments growth rate. But PayPal at 6-7% for branded checkout just isn't fast enough. And then obviously you have companies like, Adyen or something like this on the merchant side that are just growing at breakneck speeds. And Stripe would be up there too, but I don't have as good of information on them. I think we only get to see that every year or so. But yeah, I do agree. I do think that they're going to reaccelerate. And their whole, like, I also agree that your tweet isn't going to matter, right? Like, or you are right. There's not a killer app to take away PayPal, but they are still shrinking in terms of the total size of the market is growing faster than them. And that, like, both can exist simultaneously. But it doesn't necessarily mean that it's a poor investment either. That's the coolest thing about the market, right? It's like you have one of the richest people in the world, Warren Buffett, who for the longest percentage of his career was buying companies that he thought were going to fail or would have a really high likelihood of failing. And so people would bet against those companies like crazy. And then potentially their assets would be worth more than what the market capitalization of the company in total was. So he would buy up these companies and then sell their assets to buyers, to willing buyers. That is the cigar butt strategy. If you guys have, I'm sure 95% of you have heard of it, but just elaborating. All right. This was also found on X today, which I thought was very exciting. And this was potentially a new hire. I mean, not potentially, it was. Yolande Piazzi? I'm so terrible with names. I honestly apologize so much. So she's joining as the senior vice president and general manager for the Americas for PayPal. I guess that's for the branded checkout side, or maybe that is also involving Venmo and such, but not Braintree would be what I presume here. But they end up, or they're actually coming from the financial services section from Google Cloud, which is actually where, what's his name? Derek White is from, if I recall correctly. He was leading financial services at Google Cloud before going to Galileo. Where she's led teams in developing innovative cloud and AI solutions for Fortune 500 companies. Prior to that, she spent most of her career at Citigroup, including as CEO of Citi Fintech, driving digital transformation across banking, wealth management, and open banking. Very interesting stuff. They continue to change their upper management like a ton. Nathan, brother, thank you. Yeah, you made it big time. Yeah, you made it big time to 100 people. I think you got much more recognition, 9,000 views on your post alone, my friend. That'll be more than what this thing gets. But that being said, let's go ahead and move on to the next piece, which I think is way more exciting, and that is the price target, ladies and gentlemen. PayPal ended up getting, once again, another price increase across Wall Street, but this time breaking a little record over the last little bit. We haven't seen a price target like this in some time, but they raised their price target, New Street Research did, from $85 to $100. Like they said, breaking the triple-digit price target milestone that we haven't seen in some time. Very exciting stuff. That was today. So good stuff to PayPal. I continue to be a shareholder and feel much more confident. Oh, Roy, the Wonder Boy. How you doing?
Good. You had to mention PayPal like 3 different segments, and I'm like, okay, I got to come on.
Yeah. How are you?
Good. How are you?
I'm doing very well. So I've recently made a change on the channel where I've just given an open link to everyone to come on the show, and this is one of those amazing surprises where Roy is coming on to argue the fact that maybe I'm putting a little hate on PayPal's name right now, undeservingly.
I mean, like you're being fair. They have to execute, and they are growing. Like you mentioned, branded. It's slower growth. I think that'll continue to accelerate, but like branded's going to grow 15%. Part of that is the law of large numbers. But PayPal overall, they have to execute, right? So we'll have to see how Fastlane is monetized. We'll have to see how the advertising business comes out. I think there's a realistic chance that they are in a dollar neutral environment, close to that 15% growth. Probably not this time next year because it's going to take a little while for that advertise, but maybe in like 2.5 years, 2.5 years. But part of the thesis is that new hire from Google and Yolande, I don't know how to say the last name, so I'm going to call her Janet. It's not her name, but she's coming over from Google, and what she's done on the cloud, she's implemented a lot of generative AI. They published a lot of studies. Like that was basically her entire job. And we don't know for sure what she's coming over to do with PayPal, but it seems pretty clear from comments, even actually before Alex Chris was hired, regarding AI and machine learning and automation. After he's hired, some key clues within the earnings. And then with her being hired, there's a whole lot of inefficiency at PayPal. And the neat thing is they're growing top line revenue. They're adding new products, which will continue to accelerate growth. They're buying back. And at the same time, they are continuing to be more and more efficient as a business. And there's a long, long, long way to go on that. So top line revenue growth, 15% next year. I mean, no. I mean, that'd be cool. It'll be double digits. I'm very, very sure on that, unless there's a major recession. And there might be because of the news today with the longshoremen. If that continues long enough, it's going to crack America a little bit. Crazy. But like the actual like free cash flow yield, EPS, like those numbers are going to look ridiculous here in a year time.
Like I said, I'm not bashing the investment thesis. I'm still a shareholder, a happy shareholder too. But I do think having a lot of competition equals up to a really good competitor as well. Like, not one of those players is the PayPal killer, but I think the collection is what brought PayPal off of its high horse of being that digital payment company.
Yeah, and a lot of that was allowed by Dan Schulman just kind of sleeping at the wheel and not doing really anything about competition. So for sure, like it would be in a different place if Alex Chris had actually become CEO like 5 years ago. I don't know that he was ready. That's just a hypothetical. But if he did now what he was doing back then, PayPal would not be trading in double digits.
Yeah, and if we were buying at the price that people were asking for back, in peak of COVID, then it would be a really sad time. But that the same way that we're asking for a revaluation in SoFi, PayPal did get that on the reverse, right? Mm-hmm. Went from a growth stock down to a value stock, really. And a cheap one at that. Now it's potentially looking to reaccelerate. Not like there's going to be any light switch flick on where they're going to double growth, like he said, going back to 15% growth in checkouts, probably a stretch. But I do agree with you. Like the company's getting stronger, and Alex Chris is definitely very exciting. I like these longer form podcasts that he started with Yahoo Finance. Like, you know what? He needs to get himself out there. He sounds like a very normal person who is like just a genuine leader. Forget these keynote speeches, trying to shock the world and stuff.
Yeah, that's actually what he does the best is not talking from a script, but instead just interacting with people. Like he's a very genuine guy, speaks well. And I like what you said, like he's a normal person, because you can't take that for granted with CEOs. Now, there's abnormal in a good way, like Elon Musk, Jarek Isaacman, but there's a lot of weird
Sam Bankman-Fried.
Sam Bankman-Fried, Glenn Kelman, although I like him. The Redfin CEO that's talking about drinking his own urine and the blood of his opponents if the rates don't come down. Yeah, vampirism. There you go. Yeah, you want that as a CEO.
Yeah, but he could, because of where PayPal was left, and I mean that is a pretty that's not like starting with a small amount of $1 million. It's starting with a small amount of like $60 billion company, but still he could very much put himself as the founder of PayPal, or at least this new version of PayPal, if they reaccelerate and put themselves back in pole position. I mean, that would be very exciting, which it is possible. I am a very big believer that most of the work that is done here is culture and team. I talk about that a lot, but like if he is really driving that home, that'd be exciting.
I mean, that's everything that he's done the first year. That was priority number one. You see that with all the new hires, people being let go that were even pretty good. Gabrielle Rabinovich, the acting CFO, I thought she'd get it, and they're like, no, bring in Jamie Miller. He did ain't do nothing. Oh yeah, Sam Bankman-Fried.
Free my boy Sam is not a comment that you see a lot. Sorry, continue.
Well, the other thing about PayPal is like it's certainly part of the just because a stock has run up also doesn't mean that it's still not quite cheap. Like if SoFi went from where it's at, I think it's like close to 7.5 right now to like $9, people would be like, oh, now it's time to sell and take profits. It's like, no, it's desperately undervalued and it's still undervalued. PayPal, likewise, it's risen a lot from 50 to 77 something. Free cash flow yield is above 8%, which is not the 10% that it was or 11% at its peak, but that's ridiculous. 8% yield on a growing company that is doing top and bottom line growth, bringing out new innovations, and being efficient doing it. It's like, okay, I will buy more. So happily.
Did you see that there was some Robinhood news today?
Caught a little bit of that, yeah.
Caught a little bit?
Yeah, I didn't have time to deep dive that, but
Robinhood Crypto launches crypto transfers in Europe. Earn 1% bonus on crypto transfers, which I think it's pretty interesting. Robinhood Crypto customers in Europe can now deposit and withdraw 20 cryptocurrencies and will earn a 1% deposit match for a limited time. Going all the way to crypto now. I wonder how far we are in terms of the integration now with more of what... No, I don't even think Bitstamp is even closed yet. Never mind. I don't even think that's finalized yet.
No, it's not.
No. Okay. So it'll be interesting the products that change on the crypto side whenever that does end up finalizing.
Yeah, it's kind of interesting because it seems like they're moving faster with that than the UK launch. As far as the ISAs, the SIPs, the options. I don't think margin.
Well, crypto they can move.
This is something that can I even blow that up? I don't think I can. I actually contacted Robinhood today just for something. I needed to switch over my. I was being billed monthly instead of annually, and I'm like, hey, this is a mistake. I want to save $10. So I'm like that, and so I tried to switch it earlier, and I was using $1,000 of that free margin, and they said, hey, you got to be out of margin. I'm like, okay, fine. That's the only margin I use, by the way. And so then I chatted in, and this time, instead of getting a real person, this is my first time getting a virtual assistant here. I thought this was really interesting because they're obviously using LLMs and they implemented it well. And I just came in, and I'm like, hey, I just typed up and said, hey, I want to switch over to an annualized membership. And they said, okay, you'll be charged today. It'll be $50 per year. If you're good with that, let us know. And I said, yeah, that'd be fine. And then boom, it did it instantly, switched me over, charged me the $50. Never even talked to a real person, and was like near instant. It's as fast as any other LLM. And I was blown away because I've chatted Robinhood, I don't know, maybe 5 or 6 times in total since I've been a customer with them. And it's always been with a real person. Sometimes there's been really long wait times. Other time I connect right away. And this was just like, it's amazing. Like, people have criticized Robinhood as, not having very good customer service. This solves a lot of that issue, and it does it very efficiently. And I can tell you, Schwab is not, at least right now, they're not doing something like this. So this is awesome. Like I was so excited as a shareholder and also as a customer too. I was like, okay, sweet. And so I hope we get a glimpse of little things like this at the conference that's coming up here in Miami.
Do you think that any amount of customer service is going to stick around for like any business?
Yes.
Like in my opinion, 95% of all customer service is going to get wiped away.
So eventually, I think what will happen. So I guess I'll take one step back. I worked at a major university, and I was on the online side. So largely, what I did the last few years of it was train up people to help students that were chatting in or texting in or emailing in. And that's what we did, is from interest in Liberty, I just said the company I worked for, Liberty University, all the way up to matriculation and graduation. So, and we actually brought in like some lousy Zamo Microsoft chatbot, which felt like it was made in the 90s. And I was telling my superiors, and they're quite high up. I was like, we need to go with Palantir or something else. Like this isn't it. Like there's other options too. But what I can see happening, we had in an online university, we would have a little bit older than average. I think the average age was like 33 or 34 for our students. So there's a lot of adults that are doing this. And some of those, in their 60s and 70s, they're never going to be comfortable chatting with a bot. And eventually, like 30 years from now, maybe they will, but it's going to take them a little while. So there's always going to be a need for that. But what I think is going to happen is, if we had an escalated situation, eventually that would be kicked to a supervisor. I think the shift is going to happen so that the human agents actually just become miniature supervisors, that they are supervising this sort of automated stuff. And then there is a person just to keep a human in the loop, because AI, like even as good as it is, even Palantir, like if Palantir is enabled doing that, it's not going to get everything right. It'll mess up sometimes, like no matter how good you have it programmed, and you can fix it pretty quickly, but you want a human there just to provide that. And some people just prefer that too. But yeah, I think eventually, like maybe even in like 5 to 7 years, those type of jobs are going to be even more and more rare. And I tried to actually, when I was there, warn my colleagues as I was departing, like, you guys should get your degrees, because that university basically paid for it. Like you pay nothing. I'm like, get your degrees, find something else, or work your way up in that massive university. Because that sort of assistance, it's going on the wayside.
I will take the bullish stance here, because what I think you're saying is extremely bearish. I think what, and correct me if I'm wrong, I don't want to put words in your mouth, but whenever people think of these bots, they think of text bots right now. But I think that they're going to be phone call as well. And they are going to get to a level where they might have to let you know that they're an AI, but it'll be a very quick reference. And then after that, it's going to really feel like you're talking to a human.
Oh, I 100% agree.
And in my opinion, because at least the way that this happens in my old career, I guess, is that there might be a book this large of all the problems that people can have. And there are 0 people that fall out of that book. Like, now 99% of them can be solved in this much. And this is what the bots are doing right now.
Yes.
But that doesn't mean that all problems are not written down.
Mm-hmm.
And so, yes, there will be in my opinion, I completely agree. I think 5% of people, maybe even less than that, are going to be those people who are acting as supervisors for the bots, stepping in whenever it really matters. But in my opinion, the cost savings is going to be so much worth it to break it and fix it later type problems. And like, talk about an industry that I think will go away is knowledge work, because that's where AI is already much better than humans. Just here's the question, here's the answer. And I don't know. That is very interesting and really good for the stock market, by the way.
Yeah, and I don't see it as bearish. Like it's tough for people that are in that position, and they'll need to be doing something different eventually.
I think your timeline is bearish. The first 30 years, then you said 5 to 7 years. I think it's not even going to be close. I think it's going to be really short.
It should be really short. but there are two reasons why it'll be longer. So one is there is pushback against AI and automation from certain segments, and I think that that'll grow as people begin to lose their jobs. We've seen that pretty much every wave of technology, and I don't think, even though we're more technologically adept these days, I don't think that that's going to be different. That there's going to be, regulation that's coming. Like, for instance, the longshoremen. I don't know if you talked about that at all, but one of the
Yep.
reasons why they're striking, 77% rate wage raise, which is pretty sweet. But the other is like no automation ever. Is like they're probably not going to get that, but like that is just utterly flabbergasting. But there's those sort of pressures, and there is a little bit of AI fatigue I see in the market. I think that'll ramp up over the next few quarters, maybe peak out next year. But there's always been that, like, it goes back to that age old idea of like, okay, so is the point of employment just to give people jobs? Because if so, you can just pay people to dig ditches and pay others to fill them up, and there you go, you have 100% employment. But that's stupid. Nobody wants to do that. That's backbreaking work. And I can tell you, as somebody that started at this university years and years ago in that place dealing with customers, it's not a fun job. Like some of the students are amazing and great, and you have great experiences, but it is mind numbing. It is something that a robot could do like 95% of what I did. And it's not just on what we did, like every single thing, not the teaching aspect. You would want to keep the human there. AI can do some things like make it more interactive and stuff, but there's so much more opportunity, and that's just in the university. And I see that, coming across. But yeah, so the other is individual businesses are not necessarily innovative. There are some leaders that are quick to adapt to new technology. Education is one of those that, for whatever reason, they are not implementing this very well at all. It's for that university that I worked for. I would guess it's probably going to be like 8 to 10 years before they actually go that route. And only because some competitor out there, which doesn't exist, because I've looked at that competitive landscape, at least it may have changed the last few months. No one is implementing that. Nobody. Like at best, they're doing like Microsoft's Zamo, really stupid bot, which is so limited, but it does help with some functionality. Other industries, you might see a little bit faster, but I think on average, a lot of companies are just hesitant. They're slow. They're skeptical. They don't want to cost people's jobs. But eventually you have to get there. You just have to, because once your competition starts doing that and eating your lunch, you have no choice unless you would like to go out of business.
I agree with you. I don't like to talk a lot of politics, but I am like not a fan of unions.
Amen.
I think that there's always room for NASA, and then there's always room for SpaceX. Okay. And SpaceX will win in the end because they're doing things cheaper and they're not bogged down by regulation or all the T's that have to be crossed and all the I's that have to be dotted. And I think if you're any level of a stock market investor, you're going to want to try to find the companies that are not unionized because they have freedoms and can have freedoms to move faster. It's not always just about, paying employees less. It's about, not being so I actually worked for a union for a very long time. Very long time for my age. But while I was there were people who were terrible at their job that could never, ever get fired due to political reasons that they could not leave, potentially race or sexuality or something like this, that they could not get rid of those people, regardless of how terrible they were at their job. That is not a good place to, create a thriving business. Anyway, I'm getting political.
Well, but yeah, that makes your business less efficient, and that basically makes your business PayPal under Dan Schulman. And we've seen what PayPal did. Like they still grew, but it was slower than everybody else. They faced a lot of pressures because they were so ridiculously inefficient. And when businesses do that, and competitors are like, "Hey, we're actually going to be efficient, lean and mean," it's tough to compete. That's one of the reasons why PayPal struggled over the years, and it's changing under Alex Chris, but like you could take any business with that. It's inevitable that wave is coming. It's not a question of if, it's a question of when. And each industry will be a little bit different. But I'm glad that we're in the United States, because like Europe is very, very skeptical towards automation and AI. United States is like, hey, let's just use this.
Yeah. Good for them. That's awesome. I'm a big fan of capitalism, and AI is going to do some great things, and it's going to make a lot of people's lives a lot better. And in the meantime, there is going to be some job loss in certain sectors, and there will always be room to make new jobs. That's just what I believe. I think people have said that time and time again through different, you know, uh, industrial revolution type of events where people get really worried about their jobs and new things just happen to spring up. Um,
Absolutely.
Now, there was talking about this no automation thing at the port, just really quick. Like, it might take a very long time. They will not allow those ports to be shut down for an extremely long period of time. So either one, they get their pay increases and everything like this, or there's going to be some new private sector, non-unionized competitors that start to build out that say, hey, we are going to automate, we're going to lower costs, and that is actually going to allow ships to come here even cheaper. Now, that's very hard because obviously ILA is absolutely massive, representing between like 45,000, 85,000 members. But it's absolutely like that has to happen. This, I don't know.
Yeah. No, it does. Like the real danger is if this lingers, like everything is going like really, really well with the macro. And then today, like you see an escalation in international conflict, which is not good. And you also see at the same time, like, and they couldn't have picked a better time, honestly. This big strike, and a week, no big deal. 2 weeks, there's some pain, but that causes a lot of pricing pressure. That causes inflation to reaccelerate. That causes the economy to slow. People begin to get laid off or lose their jobs, or hours are cut. I mean, like there is an act, I don't remember the name of it, that the president can invoke.
Taft-Hartley Act.
Thank you. Yeah, it's a cool off period, so it makes them go back to work for 90 days. But I mean, if somebody is forced to work, they don't work very well. I guess I won't say what I was going to say about unions, but yeah, if they're forced to go back to work, it's going to be slow at best, like just enough to not, to say that they're technically working, punching in and out, move a few containers, call it a day. So, but if this actually, as I think that actually this hard stance of the union will force automation at some point. It will take a while
Absolutely.
to implement, but like it didn't have to be this way. Like they could have said, hey, let's have a moratorium on this for this many years. We want this kind of raise, and then as you shift over to automation, we want retraining for our workers, that you will retain them. Or if you lay us off, then you pay like 2 years. You like whatever it is. Like you make it costly, but you can still move forward. Now that's not ideal. That's not perfect. That's not fully free market, but at least that's a road forward. And maybe that's the way that they go, but it doesn't seem like that. So we'll have to see.
And honestly, I find with just because I've ran into this so many times, like have you ever heard of LCBO here in Canada?
I
The liquor
try
bureau?
to avoid learning about Canada as much as. No, I'm just kidding.
Gotcha.
I've never heard of it.
Anyway, it's how alcohol is sold here in Ontario, and because there's really no other players, they've become the largest distributor here, and actually one of the largest distributors worldwide because they've got a full ass monopoly here. Well, that recently just evaporated, and now there are some alcohols and everything that can be sold in grocery stores. We did not have that like America has it for the longest time. And LCBO striked against that to say, hey, like this is going to be a problem. Like we're going to lose jobs. It's like, yeah, this is also going to make a frick ton of jobs in other places. Like you're just protecting your own self-interest and have no like. And anyway,
yeah, I think unions sometimes, and especially in the past, like they were pretty important, and now it's.
Whenever I worked at the union, I made way too much for the job that I was doing. Okay. I was 17 whenever I was hired on. I was like a kid. Okay. And for what I was doing, I was making a lot. Okay. But like that part was great in the union, but also I was overpaid for what I was doing. Sat around a lot because there wasn't a whole lot of work to be done and making a decent living for being one of the lowest people on the totem pole. I don't know. Anyway, I strong points here.
Got you talking
Strong
about
opinions here.
politics a little bit. So
Yeah, I know. I can even see the viewers. People are done with it. But
yeah,
LCBO pays into Ontario billions of dollars. But anyway, yeah, I am a big supporter of more automation, more AI, more lowering of costs, lowering of expenses, and that might be a little hard on jobs in the short term, but there will be a lot more to do in the meantime. And I actually think in sectors like education and stuff like this, there actually won't be as much. I agree with you. There's always going to be a slower moving part. Like you have to have a bunch of JP Morgans that end up summoning the Robinhoods, you know? So I think that there's going to be a mix of both, and one is going to be 1/30th the cost for a user to use, or 1/30th, or the speed even faster. But I was going to say, with education and all that stuff, I do think there's going to be a big level of just like human connection, human learning, all these things that are really going to thrive. Like, AI is not going to be my yoga instructor or jujitsu coach. It's going to be a human, you know?
yeah. I think people will want that, even if even if the AI is great and does a great job with it, like people
Yeah.
want the human touch.
Yeah.
And like it's such a big need. Like even so, my daughter's 11 years old. She goes to middle school. It's her first year at it. I think it's like 25 kids per 25 kids per classroom, which on paper it's supposed to be like 13 here in Texas, and it's not. Like it's the classrooms are so crowded, the teachers have so much work, and there's so many administrators at the school. I don't know about in Texas, but on average there are actually more administrators in each school that are filing paper and doing all this federal regulation stuff than there are actual teachers, and it makes me so mad
Yeah.
because the students actually deserve better. Like increase the number of teachers, use AI and automation for all that back end stuff. And you need a few human administrators too, but like, man, it would be exciting if we could get class sizes down to like 10, 9, 8. And, we just shift people over, train them over. It's not the same people, obviously. And every single industry has some element of that where human touch is appreciated and valued. And so humans are not going to go away. Bots are not going to replace humans. But in some capacities where it's just brainless work that robots can do, absolutely that'll be done. So it's exciting. It'll be very good for markets. And if that does play out, if in your bull case, like that faster than I expect, like we're going to see 6, 7, 8% perhaps GDP growth here in the United States sometime this decade.
I mean, the one thing that I always continue to repeat to myself and try to tell people about AI, it's whatever feels broken and clunky today will feel next to perfect next year. It is the fastest improving technology we've ever seen in history. And it's the reason why people are no longer calling this a fad. And in fact, people are probably underestimating how big it's going to be. The fact that there is industries that like in your field where there are more people filing papers than the actual key role, like that's how much potential bloat there could be, or how much fix up there could be. Just like, I don't know, that goes to show a lot. And the computer era, the internet era was not very fast because people did not have the hardware. Okay. Mobile was pretty fast, and then cloud, because people did have the hardware, was quite quick. AI will be even quicker than that. It's going to be implemented immediately. I mean, we're already seeing that. We already have all the tools, but they themselves, the actual models are getting so much better over time, and that's only going to get faster.
So I know this is fintech frenzy, but one of your larger positions that you don't talk about often is NVIDIA.
Mhm.
So that kind of tells me your thoughts on NVIDIA, but like, do you have any specific thoughts as far as NVIDIA, Jensen Huang, or any of that whole industry that as far as just as a shareholder?
I think that there's a lot of people who are anticipating that, um, companies have this certain level of data infrastructure that they want. And then once they upgrade to the newest chips, then that's their, sort of CapEx spent done. I think like whenever you see Mark Zuckerberg come out and say, hey, this could be 100x more than what we're doing today, is kind of the highlight to say, hey, there's so much more spend here. The total addressable market is not figured out at all. And NVIDIA is going to be the number one player here because of CUDA. And yeah, it's a pretty easy case. It's a bet on AI. And I'm very bullish on AI.
What's really interesting too in the fintech space specifically. So if you have this massive AI wave that accelerates gross domestic product growth immensely, fintech, is part of that. So like as they implement AI, as they implement LLMs, as they implement these AI agents, then you have a lot of efficiency gains. You have revenue per employee just really, really start to climb. But you also have the boost because if GDP is going up, Cactus Jelly asked this, like, is it, companies making money, workers making money, like which is more? Probably companies at first, but it's both, honestly. As companies thrive, even if it's fewer workers that are there, like some of that does go to the worker. It's not trickle down economics, but it does happen in every single industry. And so you have the double boom of fintech where AI is helping it grow anyway. And because the economy is growing, there is more and more money coming into the system, which is also really good for fintech. So they have like a double blessing, a double portion of what's coming. And I know there's a lot of people on X and maybe on YouTube as well that are just like really bearish, not your channel and not all our viewers here, but that are really bearish on fintech just because AI. It's like, it's the opposite, guys. Like you're missing what's happening.
Yeah, I don't know why anyone would be bearish because of AI. Like you're still going to need banks. You're still going to need custody of money. They're just going to be able to help you even more. And in fact, I think areas where there's been a ton of spend in financial services, like financial advisors or, CFAs or something like this, you're not going to need those people because the knowledge-based work is going to get done by something that is read every single textbook, that understands every case study to ever be done in law or something like this. It's going to fully understand every single aspect and be able to get there in milliseconds. And
it's huge in this case.
I mean, I don't know.
It's huge. Like there's some industries where it's like, yeah, it's a nice boost, AI and Tesla, like implementing the bots and everything. That's great. And they're pretty efficient anyway. It's like, but fintech and education as well, but fintech in particular, like it is so bloated. There's so much regulation. There's so much that can be automated. And that little piece from Robinhood, like I posted it, partly, as a customer and partly as a shareholder. That pushed me even closer to just saying, you know what, Robinhood freaking gets it. They know how to launch products. They have this amazing vision. They know how to implement it. There's some risk there. But when they're doing things like this, and it's not even a big deal, it's not a big announcement, but it works so seamlessly and incredibly, like they get it. And those older companies that are around, that are catering to, older generations, like they'll still be around, but Robinhood is going to just rake in money. So I'm like right there to just saying, you know what, I'm buying some shares and I'm going to be a long-term shareholder on Robinhood. It's close, man.
I was listening to this podcast that I thought was really interesting recently, and they were talking about how millennials took such a long time to get into markets, but Gen Z essentially was immediately into stocks the second that they turned 18 because COVID had started and everything along these lines, and that it's so seamless now through your phone, and you don't have to go through those weird interactions of entering a new world and going and meeting some banker / broker to eventually get involved. No, you just download an app in the privacy of your own home and you learn yourself. And that has really opened up the floodgates for this new generation. Those people, Gen Z, do not have money right now. Millennials are not even as rich as what they want to be at yet. They still probably have another decade before they get to, how much wealth they're probably going to peak at. And they're all involved in markets. So I don't know. I think Robinhood is very well positioned.
Oh yeah. Yeah. Long term, it makes sense. Like short term, maybe the credit cards don't go well. It messes, but like they've got it together. And, part of the reason why the millennials, I think, were slow to adopt markets was just because of the scarring effect of that great financial crisis that a lot of millennials were, part of the Occupy Wall Street and like, this is awful what's happening and everything is rigged. And why would we put money in there when it just crashes? And that's right when millennials were graduating from college and getting those first time jobs and thinking about investing and buying a house. And as a result, it's kind of like the some of those before the baby boomers, I can't remember what they're called.
Gen X?
Yeah, no, older than baby boomers. That they grew up in the Depression here in the United States. Like they, even to this day, like some of those folks like wash their Ziploc bags and do things like that. That like nobody today does that. It has an impact on you. And I'm glad to see millennials are beginning to invest and take it a little more seriously. And I'm very, very glad that Gen Z is not like the millennials in that respect.
It's killing me trying to remember what the generation name is.
The silent generation.
Chat will let me know. Greatest generation?
Greatest generation or silent generation, yeah. Because they fought World War II, so yeah.
What's it called? Another thing, someone here, Cactus Jelly said, then will AI make us dumber? I saw this comment, I was just thinking about it. I don't think so at all. I think it's just going to free up people from, like, for example, ask a kid now in this generation, or not in this generation, younger than me, ask them how to write in cursive. Like, no, they probably type faster than you, And so I think that it's just getting away from some of the things that like necessarily do not need to be like worried about. It solves yourself from some of the pointless stuff of learning how to properly send an email. Well, that actually was a skill of the past, but it's really, really not needed.
Mm-hmm.
Free up yourself to do something that you actually want to do with your life. It's probably not writing emails.
Yeah, it saves from just like the need for rote memorization. There's a need for some of that, but for the most part, like, why do I need to know that 1066 is when the Battle of Hastings was fought, or AD 70 is when the temple was destroyed in Jerusalem by Flavius, or by Titus? Like we don't need to know. Actually, it was Pompey. But anyway, like we can
remember history. I'm anti that.
Well, I love learning it, and there's nothing wrong with learning it. But like, is it a critical need to have those things memorized when you can just so easily look it up? Now, to go back to that comment, will AI make us dumber? Did the internet make us dumber? Having information right here in our handle? No. Like it some people are idiots because they're just kind of wired that way. But most people use this to really gain a lot of knowledge. Now, there's people that don't want to learn. They're not going to use it for that. Fine. But it's like any tool. So it has the ability to free up mind space for things that are actually important instead of memorizing just useless trivia stuff. Like Trivial Pursuit will be really easy, by the way, with Gen AI.
What's it called? I had some older family members that are very much anti new technology. And I remember I was in their car and I saw that they had a paper map. And I was like, why do you still have this? And they're like, well, you never know if like your phone is dead or something like this. I'm like, no, I know. I'll always, like, you can charge your phone right in the car. I'm never not going to have my phone charged. So this ultimate doomsday situation for why you're keeping around all this old stuff is a problem that I haven't had. And I've been driving around for a long time now. So, I don't know. I think that there's always these things where the older generation will still stick around for quite a while as we sort of try to figure out this new AI thing, how trustworthy it is. But honestly, I think soon it'll be as used. No, not even as used. 10 times more used than Google or Google search or some of these products. I think especially once we get like it in our glasses. I remember I had a conversation with my girlfriend recently, and it was some health question. Like it was something very easily Googleable, but I didn't have my phone in my pocket. And I was like, why are we even going back and forth as if this is a question whenever we have the answer, like right beside us? And if I had glasses on, I could just involve a third party in this conversation, just get our answers so that we can move on.
Yeah, absolutely. Yeah, it's going to be really neat as that's built out. And I mean, initially people are skeptical, but then they adapt. So like the internet, basically, I mean, it's been around longer, but like 25 years. When it was dawning, like there's a lot of people that are like, I'm never going to use that. Why would I ever see a use for that? Now I've met exactly one person in the last, I don't know, 6 or 7 years that has never used the internet. She's like 94. So like it makes sense. Like she doesn't need to, but like everybody else, doesn't matter their age. Like my parents are in their 80s. Like they use it every single day. Almost every person uses it every single day here in the United States. And there's parts of the world where it's not the same, but that's going to be, I think, where generative AI is maybe you're not thinking that you're using it, but you are because you're the way you're interacting with the world.
That is going to be one of the best things about AI is it is going to involve the people who do not like using technology because it's going to speak in your language.
Yes.
You know,
Yeah.
it's not going to make things complicated. The English, well, not just English, but the human language is the programming language of AI. You know,
that's a brilliant part. You mentioned the text to speech types, not text to speech, but that it can talk to you. And OpenAI has upgraded its, I can't remember what it's called, the advanced assistant or whatever, the voice assistant. And I was playing with it some today, and it was it's a little bit better. I'm sure it's a lot better. I just haven't used it yet, but fully. Like somebody can call in, do customer service stuff, and unless the LLM actually says, "Hey, this is a bot brought to you by whatever," you wouldn't know. Like case in point, this is, I think, 9 or 10 months ago. My university again had no idea as far as like all this LLM stuff that was coming, and one of the guys that I was training was like, "Yeah, AI eventually." Like we have scammers all the time, and he's like, "Well, at least when I was on the phones, like you could tell if it was a human or not." And I was like, "Oh, really?" And so I actually instructed it through prompt engineering to just pretend like it was a student that wanted to pursue this certain discipline, have these certain questions, and then the rest it could just go with. And it invented its whole name, backstory, like everything. And it was almost seamless. This was 10 months ago, which for this technology is an eternity ago.
yeah.
Internet, took, I don't know, maybe 10 years for it to be extremely commonplace adoption. Generative AI, probably half that time, if not less.
Yeah. No, now even with the new 0.1 or sorry, 0.1 0-1 models that they have at ChatGPT are reasoning models. So not only are they just doing the regular, letter by letter trying to understand the probability of what to write next, it's also going back and saying, hey, does this make sense? Can we learn something from other forms to make sure that this is the way that we want to structure this sentence? All of these sort of things. So, and this is where we are in 2024. Okay. Imagine in 2026 what this is going to look like. Add 24 months. Right at the end of 2026. Add 24 months to these models. It's going to be nothing like we're even experiencing right now. And you guys all, like, I'm not just talking to Roy here. I'm talking to 130 people here, which a lot of people are leaving because I think they think that I'm being too drastic.
No,
but like, you can bet on companies like this that can benefit from a technology that is growing this fast. That's extremely exciting. And there might be a recession or some other macro that happens in the meantime. I think it'll all be a flash in the pan. There might be some ups and downs between, but I would bet on large growth in many economies, but definitely not the ones that are anti-AI because they're going to fall behind in great ways.
So on Nubank, on Latin America, that's one thing I don't know that well. Is there an openness to AI adoption in Latin America?
Yeah, definitely. Definitely. And in fact, they're actually seeing a lot of investment from companies like Microsoft, I think is the last one that I just saw, that are trying to expand more offices into and data centers into Latin America, because there's going to be some brain share there as well. But Nubank actually just acquired a company that does. They're an AI startup. Um, so I don't remember the name of it. I can find it, but um, yeah, no, they're definitely seeing that AI is the next frontier. Because I think the thing is that everyone right now on most of these apps has the same experience, and there needs to be a more personalized experience. And that is probably going to be the next big wave in fintech, are these personalized
Oh yeah.
experiences. The same way you open up YouTube and you have a personalized thing. It's like, I didn't even know Netflix had that large of a selection until I accidentally opened my girlfriend's uh, Netflix thing, and I'm like, oh my god, there's like a million movies here that I've never even seen pop up. you know, um, very similar things are going to happen in finance. I mean, maybe not the
Oh yeah.
greatest example, but you know what I mean.
And you were talking about when I first went in, as far like I don't know if it's Shopify, but Stripe and also PayPal, like all of them are talking about that same thing. It's personalization, and they've been talking about it for a while, and we're seeing more and more of that. Now, the craziest thing is I see people, and there are people, and it's fine, like it's their right to like opt out of all the data stuff. PayPal's made that pretty easy. I'm sure Shopify has as well. Stripe, I'm not sure, but like, why would you want a worse shopping experience when you go on? I want to see like if the algorithm knows me pretty well. It's like, hey, you're in the mood to buy whatever, then great. Here's what we think you would really like based on who you are. Like, okay, cool. I like that. It's the same thing. Like if you walked into a store and you had a personal salesperson that came right up there and is like, oh, welcome back, Tanner. Like, I know you love this sort of thing. I got the perfect shirt right here for you.
And
Great.
honestly,
That's awesome. What's the problem with that?
I worry about my savings, but I get very excited for Shopify's GMV whenever I open up YouTube, and if I continue to refresh and watch their top most recommended videos, it's constantly my favorite comedians, the finance YouTuber that I like the most that just upload. It's like constantly exactly what I want to see. Okay? It rarely ever shows me 8 videos on screen at one time that none of them is what I want to watch. I mean, I can't imagine the last time that that's happened. And now imagine a company like PayPal or Amazon or Mercado Libre or any of these more shopping apps that put exactly what you want in front of you. Advertisements are pretty good, but they're only going to get better. And
Oh yeah.
that puts a little strain on my savings account because I might have to continue to buy stuff. But it's good for economies, and that's great for those specific companies.
Yeah, I probably bought more with PayPal this week than any other week out of the whole year. And yeah, it just really, really good recommendations are popping up, and I'm like, man, this is great personalization, and it's just the beginning.
Just the beginning. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. If you want to help out the channel and help out my friend's channel over here, make sure you check out at @cross_roads. That's cross with a K on X. And while you're there, follow me on X as well. Future Investing. There's no I there. If you see an I there, he's a scammer. Thank you all so much for watching. Really do appreciate your time. But bye for now.